Hey guys, Rhett Weaver here from Intraland, Utah. We usually do this on Tuesdays. We waited till Wednesday today. Today was one of the biggest Fed announcements in 40 years. Let me explain. In 1981, inflation was at 9%. This last year in June of 22, it peaked over 9%. And so trying to read the data, trying to see what's going on, trying to see what's going to happen. Today was one of the biggest announcements, even for the banking sector, to try and figure out, is our economy doing well? Do we got problems? And so I kind of want to go over a couple different things today, but we'll be pretty quick on this. The announcement just happened. The Fed raised interest rates 25 basis points. So again, the problem in the banking sector right now, in layman's terms, is 90% of the money, 90% of the deposits that come into the bank get invested by the bank to buy bonds, to be able to loan people money out and do things right like that. Over the last 2 years, obviously with the influx of government money, COVID money, PPP money, there was a lot of deposits at the bank. They leveraged all that. They went out and bought bonds with extremely low rates. Now that nobody has money and people are going to the bank, dipping into their savings because of what's happening economically, remember, everything that we're looking at is based over year inflation. And I'm going to show you some charts. But for example, on the CPI report, which basically shows inflation and what's happening in the economy, and this is why the Fed is raising rate, is 43% of that is shelter. Shelter does not come into effect on the year until May 10th. That's why we keep talking about May 10th. And I'll show you a chart. But the data just lags so much that the government just takes a look at it and is under the assumption right now that we're doing totally fine when really we aren't. And that's why these banks are basically failing. It's because there's not enough deposits coming in on the money that's being taken out by people that are hurting, that are losing their jobs and things like that. So we've got to kind of watch this. Yesterday, before we dive into the Fed announcement today, yesterday, the housing market, there was some interesting news that was basically hitting. Applications for this last month are up over 7% nationwide, which is awesome. The news is trying to report something crazy right now, which is that the median home price has dropped. Now, if you look at this, basically there's a chart that's been floating around. I'm hoping it's right here. Yes, it is. Here's the chart. This chart's been floating around a little bit. So basically it's saying sales distribution, the percentage from 1 year ago. So January, February, and the difference of this year, $0 to $100,000 of homes that were sold. 100 grand was the sales price, 100 grand to 250. What you can see here is from 0 to 250,000. These homes since January and February have actually gone up, 0.1, almost 2%. The bigger homes, which we kind of understood and kind of knew what would happen, is these are going to sit a little bit stagnant. They might come down on pricing just a little bit. So from 250 to $1 million, that's where you're seeing a little bit of a dip. So when the news came out yesterday and basically said, hey, this is the first time in a lot of years that the median home price has actually fallen, well, that's not necessarily the truth. The median sales price right now is $363,700 month over month, because they do it on a year basis. So year, it's down 0.2%. But month over month, the median home price is actually up 1.3%. So it's a little bit mixed. And the news is obviously trying to kick up a lot of stuff, saying the housing is in a bad shape. And really a lot of stuff is just going south. But if you look at FHFA's data, it's up 8.4% year over year. And then the Case-Shiller is up 5.8% year over year. So the housing market is completely fine. Applications are through the roof right now. They're up almost 10%. Obviously, here in the state of Utah, if we could get some good weather and a little bit of run on some good rates. But this Fed announcement was actually very good and very bond friendly today, and we'll get to that. One other chart that I wanted to point out to you, and let me close this down a little bit, is really just what's going on in the housing market and why we're saying May 10th is really the date that we need to take a look at. And if you take a look at it here, this is what's happening live. So they have to take a look at it year over year. So from 22 to 23, this is why the data is lagging. This is live right now. This is what's happening to rents in America. So 43% of that CPI report is shelter, which is rent. So all these rents that were written last year that were super high, those rents, basically sometimes people who are renting homes are going to sign those lease agreements 3 months or 6 months prior to actually moving in. So a lot of that data is coming out of late 21 into early 22. And then as you can see, through 22, rents just shot up, but into 23, it's coming down. This is the data that's lagging right now that we're waiting for on May 10th. But I want to go kind of over the market today since the Fed announced the rate hikes. What's happening right now, since they didn't do their 50 basis points rate hike, I think everybody was kind of hoping for 0, but we got 25, which could hurt the banking sector, and those bonds that those banks have been basically buying up. So what we can see right now is we're up 42 basis points since that announcement basically happened, which is awesome. And the 10-year is down 14 basis points. So we're going to continue to watch this, but this is very rate friendly for basically our industry as far as what's going on with interest rates right now. We'll continue to watch this. There's a big Q&A. Powell's going to speak. He's going to get plastered with a ton of questions. How he responds to those questions, this market is still going to fluctuate today. So we've got to be very patient today, which is Wednesday the 22nd, on how Powell reacts to a lot of the Q&A this afternoon. And all that's going to get dissected on whether they're going to be bullish or if they understand what's going on in the banking sector. And so let's just sit here and watch this a little bit. But so far, really good news for interest rates. We're seeing them kind of fall, and then we'll kind of watch by the end of the day and see exactly what happens. But appreciate you guys.